Good morning. It's still morning, so happy to be there, and thank you also for the invitation from the University of Luxembourg. I'm probably the alien in the audience for many reasons. My basic work is professor of physiology in medical school, which is completely different. But if you look at my LinkedIn, you will probably understand why I'm here. As you know, in panels, there are two ways of working. You have this sort of very classic way of preparing questions before the panel so that everything goes very smooth. To be honest, that's what we've done with Fatou, Amanda, and Lise that I will call on the scene now. And there is another way, it's the way I teach, because I teach without notes. And being there this morning, I have other questions where they are not prepared for. This is my sort of social cruelty. And again, I would like to call Lise Rechsteiner from Vsquared on the stage. And also there is a question of placement also in the panel, because we have magnificent pictures, and mostly persons are sitting on another place, like Lise at the moment. Fatou, please, if you can come on the stage. And Amanda Birkenholz from UVC Partners. And I'm very happy to have them on the scene today. So as I told you, we discussed of the content of the panel and the different subjects that we wanted to talk about. The idea of this panel is the following. There have been effectively success of women in finance and also in technology, but I would like to focus our discussion on a number of facts. There are 3 points that we will address, and I will tell them immediately now, so you can potentially prepare your questions, and especially the students, which are extremely silent this morning. We had a 60 worked course with them. I had a 60 worked course with them yesterday on innovation gaps, but I'm prone to give them the mic because they don't ask questions. And we are talking about the future. Now, anyhow, this is just so that you know beforehand. So one of the questions which was isolated and is specifically important for students too, it's investing in deep tech. And I would like to ask first Amanda, because there is a question of definition. What is deep tech? Because it's a sort of word that you hear in many, many times. What is your definition of deep tech?
Thanks for having me. This was one of the non-prepared questions.
Exactly.
So let's see how this panel is going to go. But thanks a lot. And we already discussed that we would like to make this more interactive if possible. So deep tech, in my definition, actually I'm not sure about an official definition, it probably exists, but is investing into innovative, let's say, hard to solve problems ranging from space to quantum computers to fusion technologies, so very science-driven, mostly hardware, fields and investments.
To continue on the idea concerning investing in deep tech, Lise, if you look at the investment in deep tech at the moment, there are some buzzwords, AI, quantum computing, and so on. What is your feeling, your opinion, or your real advice on this type of investment in terms of deep tech for these buzzwords at the moment? Because it's already almost industrialized.
I don't know yet. Thanks for having me. I don't know yet if quantum is really industrialized. I think it's a bit further away, unfortunately, but we're getting there. I think in terms of advice, when it comes to deep tech, it depends on how you want to invest. If you want to invest as a typical VC fund, I think what is key is to really look at timing. Anyway, in venture capital, you look at the timing topic, but it becomes especially key in the deep tech areas. When you're spinning something out of new breakthrough innovation in science, is really key to focus on making a product out of it and the timeline to commercialization. And sometimes I think you need to have maybe more of an longer-term fund or an evergreen fund to invest in certain topics. We have a 10-year timeline, so we really need to see that it's happening within the next decade. And I do think quantum will actually happen within the next decade. Everything we're seeing in AI, especially around AI, exactly the same. So timing is key, but as in every other venture capital topic as well, equally the team and differentiation on the tech side.
Thank you. Fatou, a question concerning this investing in deep tech. No, biotech is not formally part of deep tech, classically speaking, in terms of frameworking. I do know that you have some interest in biotech in general. What is your position on this investment in biotech at the moment? Because it's been buzzing in the 80s and 90s. You know, I'm an old dog, so I know how it was working at that time. Now it's getting a little bit different. Do you have something to communicate on that point?
Yeah, thank you. Thanks for having us on this panel. We do classify biotech in deep tech because for us it's everything that relates to fundamental science, really, and then you develop a technology and an application out of it. At Bootstrap, we do venture debt, so we have a little bit different positioning from the venture capital, but we love biotech because these are companies that usually come up with a step change in the way we are doing things, whether it's new molecules, new ways of treating people, and they tend to have a venture profile, meaning you can do a 10, 20, 100x, and they change a lot the way we live. Like if you think of genetic sequencing, if you think of the COVID vaccine, mRNA technology today is amazing and is delivering many things beyond just COVID vaccine. For example, I'm from West Africa. Sickle cell disease is a massive cause of mortality. mRNA is solving that issue, and we invested in a company called Mina Therapeutics that's still phase 1, super early. You wouldn't think that you can do venture debt at this stage. But the timelines in deep tech are very different. Like we joke that it takes 20 years and 100 million to build a biotech company. Probably not far from the truth. So you need to think about your journey, which is a marathon, and how you fund that, how you manage the milestones when it comes to technical milestones, but also commercial milestones by establishing partnerships very early in biotech and getting those proof points to de-risk the technology for future investors. So get experts that have done it before, even if it's a completely novel technology. Make sure you line up the partnerships and you understand what the pharma companies need, what your whole ecosystem needs, because deep tech is also about ecosystems.
Thank you. Further to this, there is one point that you mentioned, which is the timeline. It takes time. If we talk about drug development or anything like that, if it's 10 to 12 years, it's super fine. Now, there is another aspect that you may think differently. If you think about science, people are thinking differently, are sometimes not recognized. They are too early in the curve, and sort of camel curve. At some point, you are too early or too late on something. Lise, concerning people who do think differently, what is your comportment as a fund? Well, how do you see things? How do you see people who are different in thinking?
We love kind of contrarian thinking. So I think it's also where you see the big paradigm shifts in technology is where you've had an established one and then suddenly something completely new comes that is revolutionizing that shift. I think to your point on science, coming a bit back to what I said before, we don't invest in science projects. So even if we see this kind of potential, for example, I have in my portfolio a lithography company that uses a completely different physics that can be revolutionary in terms of the paradigm that we have today. We saw the same back in the days with ASML coming with EUV, right? So you see these paradigm shifts. What is really key, though, is to figure out if this is still science, fundamental science, or are we going into a commercialization track? And maybe to give you a tangible example. So we invested early in IQM Quantum Computing, one of the leading quantum computing companies in Europe, Finnish company. And they started actually from day one, even if it was early, to work on a product. It was a 5-qubit setup, which was many people would question it in the market, whether this was actually useful at all. But it was interesting. They got a product out to the market and start to get feedback from customers, learning their organization to think about product commercialization, price points, etc., interacting with customers. So even if the off-takers of this were just research institutes and just used for getting to know the kind of quantum computing setup, it's still super valuable for this early stage, very science-heavy companies to be out there and think about the commercialization track.
Amanda?
Yeah. I wanted to add, so we, for example, we invest from pre-seed to Series A, and we really like also investing into teams that have developed something in academia, so during their PhDs or in the Max Planck Institute or something like that, where they have been, driving the research already for a long time. There are some fundamental discoveries that they have made, but then they're ready to bring that into a commercial product. And of course, at pre-seed stage and deep tech, this is still a long way, but I think the path of how to get there, what they need to achieve along the way, needs to be very clear, and at least is clear for the teams that we then decide to invest in. And then, of course, another important role is also the fund lifetime and where you stand in your fund circle, right? If you're more at the beginning, you can probably do earlier investments into technologies that take longer than rather when you're at the end of the fund life cycle.
Fatou, do you have an opinion on this topic too?
Yeah, I like it because we come just after you guys. I think we start from late Series A and later, and picking up from those amazing founders you get, we kind of look at it with 3 questions. And the first one is, can you take this from the lab, the science project, to actual real life application? And the second one is, once you've done that, can you actually industrialize? And this is often the breaking point for a lot of technologies. It works in the lab, it goes into a real proper product, but then can you produce it at the same quality and the same yield that is required by your clients, and with the same returns? Can you have defensible margins there, or is it going to be commoditized in the future? Because if it is, it's not great venture product for us. And then the last one, as a founder, can you navigate, because it's often regulated environment in biotech, or it's very complex supply chains, can you navigate that? Do you have the brain that it takes to do that? And if we can see that the team has those different components, then for us it's a no-brainer, even though they're not yet at commercial stage.
Okay. What you say now is a question of scaling, actually. If you think about scaling, there are a number of components which may be considered. It's talent, so people, it's capital, it's probably partnership. Are these indicators, talent, capital, partnership, are they important in your decision-making processes in terms of scaling for any sort of product which may be developed as an MVP? How do you see things? Maybe Fatou, you can continue.
Yes, sure. So we provide growth financing. It's usually scale-up capital. And we can't do it in a vacuum. So we work very, very closely with the equity investors who provide that seed funding, kind of the equity risk phase. But in deep tech, where you are impacting a lot of different supply chains, different ecosystems, you also need government support. If you think of, energy transition, for example, is one where nothing is going to happen without the public support. Whether it's EIF investing in funds, whether it's government providing subsidies, whether it's universities being funded and able to extract science out of the labs, that's the other leg of the partnerships. And then it's corporates as well, which I think we're a little bit weaker in Europe in just being good customers to startups. I think everyone complains about it. So if there's one request to the corporate, make it a bit easier to buy from startups and not kill them in the process. That's a very interlinked chain.
I think having a clear plan on what capital you need and how to acquire that for the company is very key, especially in early stage. So companies we invest in, they are planning to build chemical plants at large scale. They cost hundreds of millions. Building quantum computers, fusion technology, that's even a different level in terms of capital. And the teams that we like also, they are very cautious about this, and they address this very early. So, for example, I have a pre-seed company. You know, they're still in the lab, but they're already talking to banks to try to understand what do they have to achieve, what are the milestones, what do they have to get to unlock, for example, debt financing in the future. So they're very strategic and trying to outline that in the long term. And of course, grants are highly important and very necessary. But we can also not be sure, right, that the companies will get them. So you need a multiple of options and really actively pursue them from the very beginning to be able to, I think, pull this off on the long term.
Just to quickly add on that, I think also in the deep tech space, it's even easier to think more creatively around growth funding, because you actually sit on assets, whether you're building manufacturing facilities, real assets that you can go out and either raise money on SPVs, etc., or different kind of debt facilities. It gives you more flexibility, I'd say.
One provocative question, because Fatou was mentioning the fact that small companies would be bought back by bigger ones. It's a way of organic growth for certain companies, but it's also a way of hiding IP or killing IP. Sorry to be very frank on the point, because I went through it in another life. I was working on cannabis in the 90s. Yeah, I know. It's very sexy, yeah? But anyhow. And we were bought back. That was at a very low price, because we didn't have the money to have the lawyers. But what is your reaction as funds when you see this kind of situation happening? I know it's a very nasty question. I do agree.
Yeah, I can take it, because we went through this experience with we had a fantastic water filtration company where the IP came out of the US DARPA program. They transferred it to Europe, made it into a commercial company. They were selling, and fantastic IP. General Electric tried to go around the IP for 3 years. They couldn't, and they ended up doing a licensing agreement with them. So you're like, okay, champion. And then at the very last end, they were in negotiation with one of the strategic players in the sector to acquire them. I'm not going to name that company, but they waited until the last minute when we were about to sign the agreement, and the company had 1 month of cash to decide that they were not going to do that, when all the other buyers had pulled out of the process because they were in exclusivity. And we thought, okay, maybe they found something about the IP, maybe there is something like candidly genuine, but and we helped the company continue, we recapitalized it, etc. It still lives, it has customers, it moved back to the US, and now it's thriving. But the idea, and we know this from insiders, was from the beginning, either kill the technology because it was competing directly with the incumbent, or buy it and shelf it. Yeah. And it's just down to economics, right? What are the incentives of the parties? In this case, the technology is so superior that it continues to live, and in the end, they will do a partnership potentially. But the lesson from there was never ride on one horse, obviously, in hindsight. But also, you will usually evolve in industries where you have 1, 2, 3 incumbents. That's it. It's a very small and concentrated market. So make sure you kind of diversify around, really play up the FOMO and then the competition between your ultimate customers or potential buyers. Otherwise, they will use it to tramp over you. And it's just fair game. It's just business. No hard feelings.
Lise, Amanda, no comment?
Sure. I think what is maybe more relevant is looking at incremental innovation as a way for established corporates in Europe, particularly to build out innovation potential. We're seeing way too little of that, by the way. But I do think it's important to see that in the US, all the companies that are driving all the capital gains that we're seeing right now do come from very innovative companies. And if there's any way that we're going to fill that gap in Europe, we really need to think about how we scale up building IP in this country and building in this country, in this region, and how we support that, both in terms of M&A and acquisitions, etc., but also really building new champions. All of these were venture-backed companies in the beginning, and I think we can do the same here if we are serious about building companies in Europe.
Well, I think this
You're not forced, huh?
No, I'm fine. So I think this is a a problem, but I don't have any, clear advice on how to avoid this. I think it's difficult, and you have to find ways to navigate around it, build up a larger IP portfolio. But at the end, you can only, having patent fights is very expensive, and when you're a startup, sometimes or most of the time, you just don't have the money, right, to fight someone who's really trying to come for you. So I think, diversifying and trying to, ride on different areas and navigate around that is probably the best advice. But since we're gonna, I think, open this up to the audience, I'm also happy to get some advice.
I wanted to ask you a question, because when I gave this worked course yesterday to the students from the academy, I just had suddenly after 8 o'clock yesterday evening the massive question on this aspect. So that was the idea. Third subject that I wanted to tackle with you is the following. It's probably the most interesting one for many of us, and I'm thinking specifically of the students. I may be obsessed with students, but it's my basic work, and I'm looking there as the future of humanity in general. So the question is a question of megatrends. If you think about they are all 23, 25, 26 years of age, within 10 years, you are talking about deep tech. You talk about 10 to 20 years of development to have something which may be commercialized or industrialized and commercialized. And in your industry, respectively, what are your, I know it might be sometimes confidential, but there are not so many people here. You may have an opinion on what would be the megatrend within the next 5 years. At the university, we have a team working on megatrends, because this means getting money from different funding sources. But you are in a very different position. We are burning money, you are making money, which is a bit different. So maybe, Amanda, if you want to start on the megatrends subject.
Sure. So, I think it's very obvious. One of the big trends currently is AI, and that is just accelerating everything we have seen in the past, like exponentially. I think it's very relevant, to be involved in that, to invest into that area, but also, to utilize all the opportunities that come with it. And there are, have been trends in the past, they come and go, but I think AI is definitely like, what the internet brought over 20 years back. So this will remain, and I think it will shift how we work and how innovation is going to evolve in the future. I think other areas, for example, I look a lot at defense. It feels a little bit like defense is the new climate tech. That's also, I think, very interesting, very important, because if we look at, how Europe evolved in the past decades, we were very, relaxed about partnerships that we've had, whether that's, gas from Russia or in the US, and having manufacturing abilities and stuff in China. And now we see, and we're learning and waking up that this was maybe not necessarily the best strategy. So I think there's a lot of potential in different areas. I think defense is one where there is, a very strong boom right now, but in bringing back European sovereignty and to build up competences, whether that's like access to space, compute power, and many things around that. So I think there are a lot of opportunities for Europe right now, and we need to act upon them. And for that, we need bold founders that are, there to solve some of the largest problems, and investors, and also growth capital. To be able to fund these not only from the beginning out of Europe, but actually to bring the wealth that these companies are going to create, and let it remain here.
Thank you. Lise, any specific domain that you would list?
Yeah, we look a lot on the auxiliary topics around AI, because that is definitely a mega trend. So especially the flywheel combination of AI and energy. You alluded a bit to it as well. So there is a massive build out in terms of infrastructure, energy, the whole like support hardware, etc., behind the AI revolution, which is being created as we speak. We need more energy efficient computing. We need more efficient data center. We need a different grid. We need different energy storage solutions, etc. So that is definitely one of the mega trends that we're seeing. Another one, particularly in Europe, is robotics. So we think that there's a new automotive engineering moment in Europe happening. We see generally the market growing up to almost 200 billion in 2030 in global industrial robotics. AI robotics also growing up to 120 billion. So these are massive shifts in the market. And Europe can also play a role here building out on the engineering legacy and heritage that we have.
Thank you. Fatou, do you have an opinion?
Yeah, so I completely agree with you, by the way, that we have a massive investment gap and we need to fill it to build infrastructure for the future. What I like a lot about deep tech, and it's not just because I have FOMO of not being a physics major, is because I think that it gives you the ability to build global champions. If you want to be good in deep tech, you need to be good globally and fight with the Americans and the Asians. And so we can do that in Europe and really achieve a very large leadership. And where I'm excited being a debt capital provider is that we see AI as a trend that is accelerating development cycles everywhere, but especially in deep tech. And you mentioned biotech at the beginning. Now using AI to do drug discovery is not only shortening the cycle of discovering them, but like giving us a wider universe of drugs, of how we apply them and testing them and de-risking them early. But you need capital to do that. So for me, it's a fantastic business case, and I think it's going to create a lot of innovation, but much faster, much faster than we can even imagine.
Thank you. Are there any, we have still 3 minutes, and I wanted to give this time also to the audience for some questions. Is there anyone? Yes, 2 questions over there on the front line. So maybe we can save time. Take this mic and pass it over. Voila. Let's be efficient.
Yeah, hi. So I'm Rebecca from the Academy, and I would like to have a question as opposed to the megatrends. So do you see maybe some emerging wave of a new tech segment that would be worth to look at, or respectively, is there a niche area that you personally would put more emphasis on?
Who starts? Lise.
There's so many emerging ones. I just did a deal in superconducting digital circuits. This is really cryo-cooling. Today we use semiconductors mostly, right? And there's always been this wish to do superconducting. They're up to 70,000x more energy efficient in terms of the bandwidth and the transition that you can have today. But you need to cryo-cool it down to absolute zero. So you need to have it in big facilities where you can actually get, as you do in quantum computing, into this very low temperature. So there are definitely a lot of these niche emerging topics happening. But yeah, that's just one example.
Yeah, I'm super excited about AI materials discovery. I think there have already been a few very large investment rounds for super early companies, but I think it emphasizes that there is a lot of development in that space, and the markets and the opportunities are big, and that actually comes back then to European sovereignty, you know, not being dependent on supply chains and materials from Asia or Africa, for example, and yeah, I'm sure there is still some interesting topics to find.
Thank you.
I'll take back the mic.
Hello, I'm Absa. I'm also a student from the Academy. And I spent a few days with amazing women working on projects in their labs. And I'm also very interested in biotech. So, Fatou, you said that there's it's difficult to go from the phase when you go from the lab to the industrialization. And they also said the same. You can develop something that works perfectly in the lab, but it's very difficult to industrialize it. So I wanted to know, from the point of view of a partner, what would you say are the main obstacles between those two phases?
Sorry.
Was a very nice
Thank you
question.
for the hardest question today. I'm not sure I can answer it, actually, just to be candid. I don't think I can answer because it depends so much on which sector you're in. Let's say if you're in semiconductor, going from the lab where you're working on the physics to actually having it on a wafer where you have to send it to your fab, wait for 6 months for it to come back. You know, what I would advise is a couple of just common sense principle is work with people who have done it or done something similar before. In most industries, we're working with principles that exist for the past 50 years and you don't have to reinvent the wheel. I would also say make sure you understand that you will need double the time and double the capital to get there because you're innovating, so by nature you will have mistakes. Other thing I would say is if you pay peanuts, you get monkeys. And so I mean, buy the best you can get, whether it's people, advisors, facilities, make as much as you can in quality because that impact your outcomes by a factor, multiple factor. So not to give you a specific answer to the topic, but that's exactly the principle I would follow.
If I may jump in, we have a common portfolio company where I think is doing it perfectly. I was just discussing with them because they're developing a tool for clinical practice for better liquid biopsies. And I was discussing other, maybe one can say better technology solutions out there. And what is really key is, first of all, super complementary teams, and if they're not complementary, seek like advisors, etc., that have the industry experience. And I was discussing some other better tools with them, and they were exactly alluding to it doesn't matter if there's better technical solutions out there. You need to think about the off-takers, the clinicians that are using it, the clinical questions you're answering. And that applies to every area, whether it's quantum computing or liquid biopsy, clinical testing. It's the same. You need to be out there and develop something that's useful in the practice.
Thank you. We're already over time. If there is one last question, I will swallow the overtime. No? There, over there. Right, left-hand side, yeah.
Thank you. I'm Elena. I'm with Anew. We are climate tech VC based in Germany, 170 million assets under management. I'm asking myself, specifically if we're looking at deep tech and all of these hardware-related companies, we definitely need to support them differently in terms of non-dilutive capital options and so on, what you have all discussed. How do you see the role of us investors involving?
Well, we at UVC, we see ourselves as an active investor, so we are trying, to support our portfolio companies in the best way that is strategic and not operational. But we try to show them the different funding opportunities. There are different grants. We connect them with other portfolio companies to support them, and knowing, okay, these have received these and that grants, and to get them the best way to also get these achievements, and to connect them as well with our network, whether that's for follow-on investments, whether that's banks for debt financing, and so on. So we just try to, at the end of the day, it's in the company's own responsibility, to map all that out and to go and acquire that. But I think we can just give advice and access to our network and the best practices that we have had from all of these other portfolio companies that we've been working with in the past.
Okay.
I can add one more thing to that. Is as investors, we bring capital, but sometimes the best wisdom is to understand that you're not the one who's going to add the most value on the board, and you appoint a non-executive director who brings in industry expertise, contacts, networks, or who has done it already. And you just step back. Sometimes the best thing is not to do anything and bring in somebody who knows better.
I have to close down. Thank you very much for your contribution. We are definitely over time. I want to, but I understood that there were also questions from students, which was extremely important for all of us. Thank you very much for participating to this panel. It was extremely instructive, probably for all of us. And I guess that we have to leave now. Thank you.